Hello and welcome, my dear students, to SDL Knowledge Hub channel. So if you haven't subscribed us yet, please do subscribe and also share these videos for the benefit of other children and also send your valuable comments. Today's lesson we will be looking at the first part of cash book. So let's move on to today's video. First, we'll look at what is a cash book. Now, cash book is also a prime entry book which records the receipts and payments of cash. So, what are the sources of cash receipts for a business? Owner's capital infusion as cash, then cash sales, then money received from debtors from credit sales, then borrowing money from banks and other sources, then also cash receipts from different types of income sources like rent income, investment income, and commission income. Then what are the cash payments a business will normally do, which includes repayment of loans and borrowings they have taken, then purchase of goods on cash, then cash payments for creditors, then payments made for expenses like salary, utility bills, payments made for purchasing of fixed assets, and finally withdrawal of cash or cash drawings by the owner. Cash receipt. So what is a cash receipt? It's a document issued by the organization as evidence for receiving money. So this is also called sometimes as cash memo. So in a receipt, what kind of information is included? You have a serial number that is on consecutive order, then date of the receipt, and the reason for receiving the cash, the amount received, and the signature of the issuer or the cashier. Cash payment voucher. Now this is prepared by the business giving the details of payment as an evidence for cash payments. So in a payment voucher, the following information is included: the serial number, the payment date, the reason for the payment made, the amount paid, and the person responsible will authorize, and also person preparing will put his or her signature. The format of the cash book. So if you look at the screen, you can see the format of the cash book, which has date, receipt number, description, ledger folio, and amount on the debit side, and again on the credit side, date, and you have voucher number there, description, ledger folio, and amount. Now the cash book performs a dual function, that means as a prime entry book and as a ledger account. So how does it perform a dual function? As a prime entry book, it first records all the transactions in sequential order. Then as a ledger account, it also records the debit and credit details. So it has both debit and credit side in the cash book. Cash transactions, there are two types: cash receipts and cash payments. So when you're recording cash transactions, you have to use the double entry principle. So cash receipts is an increase in assets, so in the cash book you have to debit, and cash payments is decrease in asset, so that means the cash book you have to credit. So when recording cash transactions using the double entry rule, the values that are debited in the cash book should also be credited in the relevant respective accounts in the ledger. Same way, the values that are credited in the cash book should be debited to the relevant respective accounts in the ledger. We will look at an example how to record cash transactions in the cash book. As you can see, you are given this information regarding the transactions that happened during the period. So what you need to do is to record this in the cash book. So first of all, you should know the format for the cash book. So using the format, we can record these transactions. The first transaction, capital invested for 80,000. So that means based on the double entry principle, cash asset increases, so it will be debit. So put the date and the receipt number 1, and the description will be always the corresponding double entry other account name. So that is here capital and the amount is 80,000. Then bought goods for resale 50,000. So that is purchases. So cash will decrease. So therefore, based on double entry principle, it will be on the credit side 50,000, and we put the voucher number here, number 1. Then obtain a bank loan for 50,000. So cash increases. So description will be bank loan amount 50,000, receipt number 2. Then rent paid for 6,000, receipt number voucher number 3. So payment reduces cash, so saying rent 6,000. Then goods sold for cash 40,000, receipt number 3. In the debit side, sales increases cash, so based on double entry principle will be debit sales 40,000. Then cash paid to creditor Surat 34,000. So by payment cash decreases, so based on double entry principle will be credit. So voucher number 4 saying creditor Surat 34,000. Then on 25th one, cash taken for personal use 5,000, voucher number 5. So personal use, cash been taken, cash reduces, based on double entry principle it will be on the credit side. So 25th one, voucher number 5, as drawings show 5,000. Interest income received 3,000, voucher number, receipt number 5. So this is an income, so cash increases, therefore on debit side receipt number 5 under description show as interest income 3,000. And finally repayment of bank loan for 6,000, which will reduce the cash balance. Therefore based on double entry principle it will be on the credit side as assets decrease. So voucher number 6, loan repayment, show amount 6,000. So in that way we can record all the transactions in the cash book. So at the end of the period we need to balance the accounts. So in the ledger accounts we record all the transactions, and at the end of the period we need to find out the difference between the total values of both debit and credit side. So this difference is known as the balance in the account. So based on that we need to balance the ledger accounts. So the steps involved in balancing the ledger accounts: first record all the transactions for the period and then get the totals of both debit and credit side. So based on the highest total in either side, you take as the total for both sides. Then find the difference between the the total and the total of the lower side, which is the balance. So that balance you put it into the lower side above the total as balance carried down for the last date of the period. And finally, the same amount you record in the other side as balance brought forward or carried forward on the first day of the next period. Now we look at a full question regarding preparing the cash book and balancing the ledger accounts. So as you can see, the information is given and you are required to record the transactions in the cash book, prepare the other respective ledger accounts, and balance the ledger accounts. Now let's look at how we will prepare the cash book and the other ledger accounts. The first transaction, we started business investing 250,000. So on 1st of May, receipt number 1, in the cash book, debit 250,000 saying capital. So in the other ledger account will be capital account credited as cash as 250,000 on the same day. The next transaction bought stock of goods for 150,000. So cash book will be credited because cash is going out, saying stocks. Then the stocks account will be debited for 150,000. Obtain a bank loan of 200,000. So money coming into the cash book, asset increasing, so it's debit. So stating bank loan 200,000 debit in cash book on 4th of May, receipt number 2, and open the bank loan account for 200,000. Cash sales of 180,000, receipt number 3, cash coming in, so debit cash book stating sales to 180,000. Then paid wages for 60,000. So cash book will be credited because money going out, assets reducing. So voucher number 2 on 12th of May, credit cash book stating wages 60,000 and open wages account and debit wages for 60,000. Bought equipment for the business use rupees 120,000. So cash going out stating equipment 120,000 credit, voucher number 3, and equipment account debit for 120,000. Received rental income for 40,000, voucher number, receipt number 4 on 20th. So debit cash book stating rental income for 40,000 and rental income account credit for 40,000. So income increases. Cash sales again for 120,000, receipt number 5, again stating sales account debit cash book for 120,000 and in the sales account second entry stating cash for 120,000. Repayment of part of the loan for 25,000. So cash going out of the cash book. So credit cash book stating bank loan for 25,000. Voucher number 4, 25th of May. And in the bank loan account, we already have 200,000 as credit. So this will reduce, so debit liability by 25,000. Finally, commission income received for 25,000 is an income. So cash coming in for 25,000, debit cash book, receipt number 6, 30th of May, and commission income account credit for 25,000. So now we have recorded all the transactions in the cash book as well as in the respective ledger accounts. So what we need to do is to balance these accounts. So take the totals of both debit and credit side. If you look at the cash book, the highest total is 815 in the debit side. So you put that into both sides total, and the difference you take as balance carried down on the credit side at the end of the period 30th of the fifth month. Balance carried down as 460,000, and the beginning of the next period, that is 1st of June, you state as balance brought forward and put the balance of 460,000. So similarly, you can balance the rest of the ledger accounts taking the totals of both sides, and the higher side total minus the lower side, you get the difference, which is the balance, and then you accordingly put balance carried down and balance brought forward, and balance the rest of the ledger accounts too. So hope you got a good understanding about the cash book, the first part. So we will be in due course looking at part 2 of the cash book. So if you haven't subscribed us, please do subscribe and also share our videos. So until we meet with another O-level business studies and accounting video lesson, bye for now.